For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Short video today on following the money. Received a question regarding process, and it was an excellent question. The question came back to, I still don't understand day 1, day 2, day 3. Can you go over your process each day, how you filter through your pairs? Now, I've talked about being biased to the short side, and an easy way to obviously identify pairs potentially, especially if I'm focusing on London or the US session, is an instrument that's at the high of the day when that equity market is about to open. So the simplest thing to understand is, I've talked about previous days' highs and lows and previous week's highs and lows. The high and low of the week are the most important things to understand. Perhaps just a short little whiteboard example will help. If the simple pattern is day 1, day 2, day 3 for a sell high pattern, Monday, Tuesday, Wednesday, Thursday, Friday, or maybe Thursday, Friday, it can be any of those, then if we're inside of a previous week's high and low when Monday begins, Monday's our day 1, and we're trading in here, we can still have a daily high or low level broken, but when I have other time frame traders triggered into the market daily, maybe weekly, larger funds, institutions, longer time frame traders, 4 hour, 1 hour, obviously 15 minute, 5 minute, 1 minute, at this point, everybody's in the market. If this is our day 1 and we break out on day 1 and we have Asia, London, New York, I can have a day 1 trade up high in the US session. I can have a Asia trade possibly at the high of the week or the high of the day, high of the week, high of the day, high of the session. I can also have a London trade, high of the day in London, and perhaps a low-hanging fruit trade in the US. The most important thing to understand, though, is when a level is broken, the low of that day, that session, that week, whatever, if that's a Monday, there is money. As soon as that level is broken, there is money at that low. Money, and that becomes a target. If they come up and make a higher low, there's money there. If we head into the beginning of a session, US, Asia, London, whatever that may be, I am going to trade into the money. That is where the money is. That is where the trades are. The retail mindset is following these swings up into the high, and by the time they get into the trade, the market will blow off vertically. Now, we can have a day 1, a day 2, and a day 3 that can keep going. So that comes back to how big our range is, the timing of these moves. This can happen at the end of London. This could be a London squeeze for a trend trade long at the end of the London window. And perhaps they're going to go higher into the US session for a sell high trade. And that could happen at the end of the 3-hour window. What I'm trying to emphasize is that when you understand where the money is, the session timings, the trades make sense. The instrument is irrelevant because in a large majority of cases, obviously, yen pairs are going to move in Asia. And in other cases, we may get a Canadian dollar trade on a day 3 high of the week that trades in Asia. They might break down, come back up into the London session. Market breaks down, comes back. We might get a news catalyst trade on a day 3. So there are all these scenarios, but the most important thing I want to emphasize in this video is that when a level is broken, whether that be a peak formation for a session, so that could be the low of Asia, a peak formation low of Asia gets broken. That means the most recent high, whether that's a US session peak formation high, the high of the day, the London high, a lower US session peak formation high. I know as soon as that level gets broken, there is money in the market because that is where stop losses will be placed. There'll be breakout orders on the other side, but this market can potentially be jamming traders in, trading lower, and each peak formation as this market comes lower has money building up. This money becomes order flow for a session trade reversal. I talked about day one. We can have day one, a day one runner. So day one and day two, typically, if Monday goes up, that's our high and low of the week. Now day two, Tuesday, may come back inside. By the time we have Monday, Tuesday trading, we have our high and our low of the week. Now if we haven't broken any other levels, that is our initial balance. Our opening range is Monday. Our initial balance is Monday, Tuesday. This can be now a day one on Tuesday, or the peak formation if that's a Monday. We'll call Monday's, the high is Monday. That's day one. Day two is Tuesday. We can go into Wednesday, and we may get a reversal trade on day three. Day one, day two, day three. It breaks out first, possibly on a Monday. Day two auctions back down towards the low of the week. Low of the week. So Monday is the high of the week and the low of the week. Day three can be a short squeeze vertical. Day one, day two, day three. Now along the way, we can have session trades. We can have, if Asia put the high in on day two, we may be looking for that low-hanging fruit continuation trade. Or they may come back up towards the high of the day at the Europe Open and roll over in London. Those are the types of scenarios that you need to be thinking about. So when a level is broken, and we'll look at some specific examples. So for example, on day one, the first thing I'll look for is a pair that's potentially broken out of a previous day's range, and ideally the high of the week from the previous week, if that's a Friday or Monday. Same thing would go if I was looking for a long trade. If I'm coming out of a consolidation, we'll redraw this. For example, we can have a week 3 consolidation. Week 1, week 2, week 3, the market may be in a consolidation. We could be in a breakdown on a Friday for a continuation trade on a Monday. Again, coming back to understanding 1, 2, 3. We can have 3 weeks of rise. New month, or towards the end of a month, a consolidation for a reversal. I talked about the timing on the daily charts. A new month begins, we can see a new timing cycle begin. The same thing happens with the week. We can have a Monday to Friday pattern where the week went up. They may have a narrow range day on a Tuesday. Day 3 is on Tuesday. Day 1's Friday. Day 2 is Monday. I should redraw that line over here. Make that our Friday is our high. Monday's our narrow range day. Tuesday, they can trigger the low of Monday, getting shorts into the market, trapping inside bar traders, and begin the move back up. This becomes our new day 1 on the long side. We have longs in the market. So these are different types of templates that will show up. But the number one thing to understand is that when a level is broken, there is money in the market. If they go higher, there's money in the market. If we get to a new session timing window, follow the money. So Your homework is to go back through your charts. If you really want to learn these templates and understand the session trade, so again, traders I talk to from all over the world, southern hemisphere, northern hemisphere, in the middle of the hemisphere. So we have traders trading all different time frames. If we are trading Asia, I'll look for something that's potentially breaking a level in Asia. Or if we've come out of a large move, we had a reversal from the previous week, euro yen. Day 1, day 2 to the high, day 3 to the high. But again, what are your best trade setups? A level is broken. As soon as a level is broken, I know there's money in the market. Creeping trend back up to the high at the Europe-London session. High of the day, high of the week at the open of the Europe window. So traders who shorted this in Asia, just at the high, again, they're shorting into peak formation lows. But once that level's broken, we know there's money in the market. The most recent peak formation low, which would be the low of the day. So again, pay attention to these bars. Although we see a higher low, we're inside of a larger candle. So understand where the money is. Each time they swing higher, they're trapping traders chasing the move up into the high as the next session begins. High of the day opportunity for a session scalp. The market breaks down, comes back to the low of the day, triggers the low of the day. When we hit the low of the day, I know there is money at the high of the day. Again, session trade, broken down market. This is a 15-minute chart. Obviously, if we're going down smaller time frame, when that level is broken, we have money coming back into the market. I redraw my lows. First hour puts a high and a low in place. We have a broken down market. That is my high bull candle. We have our higher low, trapping volume back up into the high. The next thing I mentioned was focusing on the level. The level, if I'm going to be shorting this on a day 1 low-hanging fruit trade, I want to short it above the numbers once I'm confident they have locked in the high of the day. The New York equity market opens down low and brings traders back up into the high above 50. We get our engulfment inside of the peak formation above the numbers for a vertical trade down, a day 1 low-hanging fruit trade in a broken down market from the high of the day. And the reason why I'm demonstrating this on the euro yen is it's a textbook day 1, day 2, day 3, stair step to the high of the week. We had news on the Wednesday, day 1, day 2, day 3, high of the week on Monday. But we had a first bounce trade after the news on the Wednesday. So each time a level is broken, they break it in the London session on Tuesday. There's money in the market. New money entering the market. They swing back to the high of the day. There's new money underneath the higher low of the London session. New money in the market. This vertical move up top traps higher level longs. There are higher level longs on shorter time frames. New money in the market. It breaks down. Goes into consolidation. Again, if you master following the money, the session trades are easy to identify. We have our consolidation. They break down, clear out the higher level longs. When they break this level, I'm not talking about tapping it with a little pip. I'm talking about breaking through the level. We know there's money at the high of the day. They pull back and squeeze into the low of the day. At what time? London open. 45 minutes to the low for a vertical move back to the high of the week. High of the week traders, right at the beginning of the U.S. session. News takes traders down 75 pips, 100 pips. We get our first bounce trade 15 minutes after the news into the New York session for the follow-through. So for traders who are struggling with the high and the low, these peak formations become the new highs and lows of the day. When they break through a previous day's low, you'll notice this consolidation is inside. It breaks lower level highs. We know there's money down at the low of the day. They go back up to the high of the day at the end of the Europe 12 candle window. We know there is money at the low of the day. They break out of the previous day's low. We now know that there is money at the previous swing high of the day. As soon as these levels are broken, there's new money entering into the market. Stops, liquidity, breakout traders, limit orders, whatever you want to call them, it doesn't matter. There's new money in the market. Follow the money. What time is this? Down low, New York Open. We're at the low of the week, Thursday. Day 1, day 2, day 3 to the high, vertical move, consolidation, break the low first, back to the high of the day. Creeping trend higher, higher highs, breaking new highs. We know there's money at the low of the day. They break to the high again. We know there are higher level longs getting trapped in the market. They break the middle high at the open of the Europe window. We know there is money at the low of the session. And if you need to see this, blow it up on your charts. Go and hand map this out. Get the process down. We break lower. We know there's money at the high of the day. They break out right prior at the high of the day to the US 12 candle window. We know there is money at the low of the day. You heard me say this over and over again. That lower low, the lower low on the inside is your gift. That is our snowplow. That gives us our bias for the direction heading into the next window. They've broken lower and cleared out the low of the day. Put new money in the market up top. They break out, engulf, pin hammer, opening candle, open at the high of the day of the US 12 candle window, back to the low of the day. Now we have money in the market at the high of the day from the previous day. This becomes our high of the day that's been broken out, our false break reversal. You hear me repeat this over and over again. 3 things that markets do. They break out, they pull back, and they trend. They break out, they fail, and they reverse, or they stay in a trading range. So regardless of all the fancy names and all the other gimmicks that people want to try to peddle you, it's a high and a low and there's money. Understand and follow the process when you're in a session. Follow the 3-day cycles. Understand where you're at in the session that you're trading within those 3-day cycles, whether you have a short opportunity, a long opportunity for reversal trades, trend trades, or reversals. So go through your charts, mark off these levels. Again, each session, a peak formation. When it's broken, if you're at the high or the low, new money will be entering into the market. Follow the money, traders. Have a great weekend. Enjoy your day. New week starting. We're going to have, again, huge opportunities. It doesn't stop week after week. Keep getting better, 1% better every day. And as many of you now know, the question to ask yourself is how good can you get? And may the markets go with you.